What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Thursday, May 16th. All right, guys, Nvidia stock here today. Pretty nice green day, up $32.74 per share. That's plus 3.58% in regular trading hours. It's up another over 5 points here in the after hours. But listen, as always, you know, it is the real price. If I'm a bull, I'd prefer it's up in the after hours than flat or down, but it is on low volume, so take that after hours movement with a grain of salt. But listen, let's take a look at this thing. We're going to pull out everything that the market was willing to give us on this name as we possibly can, as efficiently as we can, heading into tomorrow. So we'll start with an analysis of the volume profile, look under the hood, pull out some bias underneath the underlying move. And then we will take a look at the psychological levels. Big money, the institutions, the funds, all the retail traders, everyone's watching them. So by default, we need to be paying attention as well. When there's a lot of decisions being made around those levels, it's necessary to know where they are. Implied volatility, specifically important for you options traders. And then we'll look at the expected move for tomorrow and the directional bias coming out of the chain. So let's get started here on the 5-minute with our volume profile analysis. Listen, guys, by the way, if you're new here, NVIDIA is a daily upload. I cover this every single day, so I appreciate you subscribing to the channel. My goal here is 10,000 subs, and I know we can hit it, but not without your help. So I appreciate it, and I'll keep the videos coming. Now, 1 hour before the market opened here this morning, we, of course, got CPI, that's inflation data, that popped the overall market. Now, quite a few stocks off the open faded, but not NVIDIA. NVIDIA continued higher, so let's take a look here and pull up the volume profile. You can see that the news, this is very normal. We saw this across the whole market, a pop and drop in terms of volume. So let's look at the actual intraday session when the real volume poured in. And honestly, guys, this is, like, if we compare to yesterday, you know, this was a high volume open, and the volume itself, a couple million shares in 5 minutes, you know, it's probably not the craziest we've seen, but it's contextually relatively high. There are wicks on that bar, so understand that was probably a battle bar, a lot of buying and selling going on the same bar, but ultimately some, we'll just say some, bullish bias on that one bar, but I prefer to see consecutive bars to really start assigning any kind of crazy bias. So let's move on. Very contextual, quick fade in volume off the open, that's normal. Through here, it starts to get a little weird, right? Because we're getting some pops, but only on every once in a while on a green bar, okay? We also got that a little bit back here, but that was still coming in from a few candles off the open, so it's more expected to have a little higher volume back here. So this is very, it's not black and white, right? There's a lot of context. I use that word all the time, I feel like, but it's the best word to describe this. That is, it's the context that makes this matter. Okay, depending on what you're looking at, what time of day you're looking at it, those pops, they're not consecutive, right? They're periodic. So if anything, it's again pretty slight bullish bias. We're not really seeing overwhelming bias here. You know, moving through the day, it just gets even less of leaning one way or the other. A very contextual close as well. This bar here, that is a rebalancing bar, that high volume green bar. That's expected. That's very normal. Typically has very little movement in terms of actual stock movement, because we're seeing a lot of buying and selling, rebalancing, right? Being triggered on the closing bell by algorithms. So honestly, guys, you know, it's a great green day. Nice run for the overall market. Nvidia certainly benefited. And we'll take a look at those levels a little bit later on. Things are starting to get really interesting here. But honestly, if I don't remain unbiased, then what are we really doing here? The truth is, the bias in the volume profile is a little light to the bullish side compared to what I think bulls would really be after. But let's move on. Let's take a look at the psychological levels that, you know, the self-fulfilling prophecy areas that a lot of decisions are going to be being made around, so we got to look. Now, on the 30-minute, guys, we have been above both moving averages for a few days. And it's getting a little nuts now. We, of course, put some separation between the stock price and the moving averages here today. But that is ripping the 50-period upside. I mean, we're looking at, what is that, nearly, I mean, man, from yesterday's video, this thing was probably at around low nines. We're talking over 20 points of movement in just the 50 period here on the 30-minute today. That's good. I mean, right? Because what is that? It's a psychological barrier. Whether it's support or resistance, or at least potentially, depends what side you're on. We're, of course, above it right now. So the idea is to get the same look on as many time frames as possible, and getting one of those psychological barriers, in this case the 50 period, as close to the stock price as possible after you make a big move across as many time frames as possible, to put as many psychological barriers back the other way as close to the new price as we can get. Okay, so starting on the 30-minute, it's going to be the quickest moving out of the charts that we're going to look at here. It's making some quick moves. All right, so bulls, ideally tomorrow. Ideally, the stock price is, of course, looking specific at the 30-minute, flat or up, because a big backslide can cause some problems when it comes to that 50 period, right? So at least flat or up with continuation upside out of the 50 period. You're just claiming more $10 increments, which can act as psychological levels. On Nvidia, it's really more like $50 to $100 increments, but the $10 increments, I would say, aren't nothing. And just get that 50 period as high and close to the stock price as possible, with the stock price, of course, remaining above it. If we retest it, I don't care what volume we retest it on, as long as we bounce off of it back to the upside on higher volume than we tested it on, ideally. Okay, now if you test it off the open, it's kind of hard to see higher volume bounce, because you expect volume to fade so much after the open. That's where the context comes into play, though. But generally speaking, higher volume on the bounce than the test. All right, now bears. Barring some big dump off tomorrow, you can probably expect that 50 period is going to continue upside through tomorrow morning at least. Okay, so asking that 50 period to flatten out is a little unrealistic, again, barring some kind of big dump in the stock. So bears, really, I think the ideal scenario on the 30-minute in particular is to crack that 50 period to the downside, break it on high volume, right? It'll be higher upon any test in the morning, likely. Break it downside on big volume, retest it on low volume, a small sample size betting on the break back upside, and then boom, volume pours back in on a rejection, reclaiming the 50 period as short-term resistance. That's really the look that I would be looking for from a bearish perspective here on Nvidia tomorrow. Now, the 4-hour chart, guys, I mean, how relevant is this right now, really? The 50 period is that nearest level. It's 5.6% away. So honestly, guys, bulls, that thing moving upside at an accelerated rate is really all I'd be caring about here. With the 4-hour, I'm thinking about it and watching it if it comes back into play. Meaning either of those two moving averages, which are really the only things that are specific to this chart, are near the stock price yet again. Like, for example, this last week or so, it's been pretty in play. But today, this separation, right, requires a big down move or a big up move out of the 50 period, which would likely take some time. The 4 hours is a slower moving chart, right? To really get back into play. It's always in the back of my head, because the 4-hour is very relevant when it's in play, but when it's not in play, I'm thinking about it. If it comes back into play, then I pull it up again. I'm never just completely ignoring it, though. Now, listen, the daily. The daily is always the most important chart, whether the moving average is close or not. Here's what I think about the daily. When the 50-day moving average... Now, first of all, some of you might be thinking, like, what's up with this guy in moving averages? I get it. Here's what's up. Everybody watches these. The 50 and the 200 on the 30-minute, 4-hour, and daily are so stupid obvious that every beginner first day in their charts has them on. All the way up to the institutional management team who's making moves on behalf of their clients, and they've been doing so for 50 years. Everybody's watching the 50 and the 200 on the 30-minute, 4-hour, and daily. All right, it's the cleanest, most simple set of charts you could ever imagine. Probably boring as well, but the truth is, I like boring. I don't care if it's exciting. I don't care. I'm here to make money. I'm not here to be entertained. So, my belief has become that self-fulfilling prophecy mentality. And it's been that way now for years. Okay, I care about what other people are watching and what I know that other people and institutions are going to make decisions around. And I choose to look at the thing, the chart with the indicators on them, that I can confidently say has the highest concentration of eyeballs that I could possibly think of. So that's a simple 30-minute 4-hour in daily with the simple indicators of the 50 period and the 200 period. Volume, right? If you even consider that an indicator, I kind of just think of it as part of the chart. And the psychological levels / technical levels. By the way, the psychological levels, if obvious enough, tend to become technical levels and vice versa. So when we're looking at a daily and we're on top of like the 50-day, that's the obvious story. But in the case like today, when we're looking at the daily and we're 7% away from the 50-day, what is the immediate story? Well, listen, bulls, what have we been talking about for a while here now on Nvidia? From $900 up to like 1,000, the only two things that are even potentially kind of, quote, in the way are a potential psychological level at 950, which we're currently like right on top of, and the all-time high. But, well, I mean, let's be real. The biggest level between 9 and 1,000 is 1,000. So, listen, bulls, tomorrow, if we dump off, ideally, hold 9. If we really dump off, do not give up the 50-day. But the goals go as follows. Break and hold 950, and then we can look in the near future to potentially use 950 as kind of that last trampoline to push through all-time highs to my real look, $1,000 a share, because 1,000 is so obvious, everyone will be watching it. Bears, that explanation should make what you guys want so stupid obvious. If I'm a bear, I'm looking at this chart right now and I'm saying, do not give up 950. And if we do not give up a new all-time high. And if we do, by all means, do not give up $1,000 a share. But ideally, if I'm a bear, we reject off 950 and we get below 9, if not below the 50-day. How do we delay things and discourage as many bulls as possible? Get below 9, get below the 50-day ASAP. All right, but really, immediately reject 950 because I don't want to get through 950 and start opening up all-time highs 1,000. Now, implied volatility. Okay, it's in the mid to high range, I would say, maybe even closer to the mid range now, based on or compared to the last 3 months. Okay, so understand that it's in a little bit of no man's land compared to the last 3 months, in terms of making really obvious like Vega-backed options plays. If you're looking just compared to the last month or so, it's certainly in the higher range. So make sure you're comparing IV to your intended trade time frame, not just where it is compared to anything, because it can change absolutely. If you're comparing it to the last week, it could be very different than comparing to the last 3 months, and that could be very different from comparing to the last 2 years. So you have to keep in mind what is your intended trade time frame, and then compare it to that. Okay, or a little bit longer than that. Like for example, if I'm buying options that are 8 months out, I'll look at the last like 9 months to a year of implied volatility and see where it lies in comparison to that. Okay, assuming my intention would be to hold to expiration, which if my intention is to only hold options for 2 weeks, okay, let's say you're really making a shorter term play, well, then maybe you want to look at IV compared to the last month. Okay, I think that's the best way, at least for me, the most contextual way to look at IV. Now, expected move. Okay, you guys know Wednesdays get a little weird. Here's how we do this. The next expiration we have is Friday, May 17th. The expected move by Friday's close compared to today's close is $25.15 per share. Here's what we do to get tomorrow. We divide that by 2 trading days, Thursday and Friday. And then what we typically do is add back 50% to make up for the fact that the initial calculation implies, all green days into the end of the week or all red days. I have found that when we're dealing with only 2 trading days left, Wednesday nights, right, when we're looking ahead. That is 50% is a little heavy. It feels a little heavy, and in practice, it seems to also be a little heavy of an add back. So I like to run the initial calculation, which gives us plus or minus $18.86 per share after we add back 50%. But then I shave a little off, and that leaves us with some kind of an expectation for tomorrow of somewhere around plus or minus $15 a share in terms of expected move here on Nvidia. Now, you're probably thinking this seems like total guesswork. It is absolutely. It's very educated guesswork, though. With trading, the reality is there's a lot of that involved, and whoever can do the best educated guesswork, along with, of course, all the other things like risk management and things like that, discipline in general. But in a lot of ways, whoever does the best educated guesswork wins, right? Which means, in a way, whoever spends the most amount of time looking at this data and trying different things and then kind of tweaking their educated guesswork to make it better and more educated, whoever does that wins in a lot of ways, along with assumed discipline. So that's kind of the expected volatility, right? The one standard deviation expected move being priced in by traders, by the market. And by design, there's no directional bias baked into that because the volatility expectation is a massive part of the story on its own, especially if you're trading options, which are directly influenced, the price of them directly influenced by the market's expected volatility. So we have to know where that stands. Otherwise, we're trading completely blind, just going directional. That with options, that doesn't fly. There's no advantage there because you're competing against people who are calculating everything and take it very seriously. Okay, so you have to as well. But you're probably thinking like, okay, well, what about directional bias? Well, we did the whole analysis, right? But now, this is my favorite part: the volume. Okay, I've been tracking this for years. I really enjoy looking at this. I think it's a really interesting perspective because what this literally is the sample size of all the options trades today, right? And just today gives us a really nice view of what the thought process at least seems to be from a big sample size of traders today. So we have 1.47 million total contracts were traded today. 904,000 of them were calls and 570,000 puts. So we are seeing a call side bias on the overall ratio, but what's really interesting here is if you end there, you're missing part of the story. What I like to do, since these videos are geared primarily toward the next day, since I'm covering Nvidia every day, break it down by time frame, right? The short-term speculators in particular, at least the highest concentration of them is going to be that 0 to 20 delta range. In that range, we have 259,000 calls and 295,000 puts. So that bias actually flips slightly bearish when you break it down by the higher concentration of short-term speculators. Now you're thinking, okay, well, that's interesting. So where does the overall come from? Well, that's getting beefed up by a more bullish at the money 41 to 60 delta range, which on average is kind of like more like the midterm outlook. And then a bullish 61 to 100 delta range, which is more like the mid to longer term outlook on average in terms of expiration, the average expiration being traded at that delta. So listen, guys, an interesting one here today on Nvidia. Let me know what you guys think down below. But listen, one thing I do ask you to do if you're appreciating these daily Nvidia uploads is just leave a like on the video. It's free, takes half a second, and then get out of here and enjoy your day. I appreciate it, and I'll see you in the next one.